Ever wondered how LegalZoom, that online legal services giant, navigates the complex world of taxes? It's not as straightforward as you might think, especially for a company that offers everything from LLC formation to estate planning. Do they pay taxes like a traditional law firm? Or is their digital-first approach reflected in their tax structure? Understanding how a company like LegalZoom is taxed isn't just a matter of curiosity. It offers fascinating insights into its business model, revenue streams, and overall financial health. When we talk about how LegalZoom is taxed, we're essentially looking at two main components: how LegalZoom as a corporate entity pays its own taxes, and how its services impact the tax situations of its customers. First, let's establish what LegalZoom is. It's a publicly traded company that provides online legal document preparation services and access to independent attorneys. Their business model is a hybrid, combining transactional services, one-off document creation, business formation, with subscription-based offerings, ongoing legal advice, registered agent services. This dual revenue stream is a key factor in how they operate financially and, consequently, how they are taxed. As a publicly traded corporation, LegalZoom.com, Inc. is primarily taxed as a C corporation. This means that LegalZoom itself is a separate legal entity from its shareholders, and it pays corporate income tax on its profits at the federal and state levels. This is the standard for most large, publicly traded companies in the United States. The current federal corporate income tax rate in the U.S. is a flat 21%. State corporate income taxes vary widely by state. LegalZoom's financial reports, which are publicly available as they are a NASDAQ-listed company, offer a glimpse into their revenue and profitability, which are the basis for their corporate tax calculations. They report both transaction revenue from one-time purchases and subscription revenue from recurring services. Both of these revenue streams contribute to their overall taxable income. Expenses related to their operations, such as marketing, technology development, salaries, and administrative costs, are typically deductible against this revenue to arrive at their net taxable income. Now, let's talk about the double taxation aspect often associated with C corporations. After LegalZoom pays corporate income tax on its profits, if it chooses to distribute those remaining profits to its shareholders in the form of dividends, those dividends are then taxed again at the individual shareholder level as personal income. This is why it's called double taxation. However, many large corporations, including LegalZoom, often reinvest a significant portion of their profits back into the company for growth, research, or acquisitions, rather than distributing all of it as dividends. Beyond the federal corporate income tax, LegalZoom also faces various other taxes that any large business would, including state income taxes, property taxes on any owned real estate, payroll taxes for its employees, Social Security, Medicare, unemployment taxes, and potentially sales taxes on some of its services, depending on the state and specific service. The intricacies of sales tax on digital services are constantly evolving, and LegalZoom, like other online service providers, must navigate these varying state regulations. But here's where it gets even more interesting: how LegalZoom's services impact the taxation of its customers. This is a crucial distinction. LegalZoom isn't directly responsible for its customers' tax obligations. Rather, it provides tools and services that can help customers structure their businesses or manage their personal finances in a way that has tax implications. For instance, one of LegalZoom's most popular services is forming limited liability companies, or LLCs. The beauty of an LLC from a tax perspective is its flexibility. By default, a single-member LLC is taxed as a disregarded entity, meaning its income and expenses are reported on the owner's personal tax return, Schedule C of Form 1040 for a sole proprietorship. A multi-member LLC, by default, is taxed as a partnership, requiring Form 1065 and issuing Schedule K-1s to its members. However, an LLC can also elect to be taxed as a C corporation, Form 8832, or an S corporation, Form 2553. LegalZoom facilitates the formation of these entities and provides guidance and resources on their tax implications, but it's ultimately up to the customer and their chosen tax classification to determine how their business will be taxed by the IRS. Similarly, LegalZoom offers services for forming corporations, C Corp and S Corp, setting up nonprofits, and creating estate planning documents like wills and trusts. Each of these has distinct tax consequences for the individual or entity. For example, C corporations formed via LegalZoom. As discussed, these face corporate income tax at the corporate level and potential double taxation on dividends. S corporations formed via LegalZoom. These are pass-through entities, meaning profits and losses are passed through directly to the owner's personal income tax returns, avoiding the double taxation of a C corp. Nonprofits formed via LegalZoom. If they qualify for 501(c)(3) status, these organizations can be exempt from federal income taxes. LegalZoom helps with the application process for this status. Estate planning documents, wills, trusts. While not directly generating income, these documents are critical for minimizing estate taxes, inheritance taxes, in states that have them, and ensuring efficient transfer of assets, all of which have significant tax implications for beneficiaries. LegalZoom also offers tools like LZ Books and other resources aimed at helping small businesses manage their finances and prepare for tax season, emphasizing the importance of tracking income and expenses for deductions. They publish numerous articles on their website covering various tax topics, from how to file LLC taxes to understanding tax deductions for small businesses. This further underscores their role in providing information and tools that aid in tax compliance and planning, rather than being the direct taxpayer for their customers. In essence, LegalZoom as a company is taxed like a typical C corporation, subject to corporate income taxes on its profits from its transactional and subscription services. Its growth, profitability, and strategic decisions, like the recent acquisition of Formation Nation, all factor into its financial performance and, consequently, its tax obligations. For its customers, LegalZoom acts as a facilitator, providing the legal frameworks and information that enable individuals and businesses to operate within various tax structures, each with its own set of rules and responsibilities. They empower their users to make choices that have significant tax ramifications, but the ultimate tax liability rests with the customer. With that said, thanks for watching, and until next time.